I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon and welcome to Grain TV. It's December 17th, 2013. To my left is Logan Burgess and I'm Brock Shimbano. We saw another mixed trade in Chicago. Let's turn over to the live quotes to see how we ended. Corn was up 3.5 cents. Soybeans charging higher, up 8 3/4 cents. Wheat in Chicago down 2 cents, and Kansas City following along down 5 cents once again. You know, Logan, we do continue to see wheat slide. We once again missed out on the Egyptian tender.
Right.
That sale went to Romania and to Russia, but in today's trade, it looks like soybeans was really the talk of the trade.
Yeah, we saw a lot of strength out of the soybean market here once again. If we can pull up here a January soybean chart here, a chart that we've been looking at quite a bit here recently on Grain TV. You can see here with today's action, we moved back to the high side of this range that we've been really trading since late November. The high side of that range, 1350. The low side is that 1310 to 1312 area. We saw 1350 act as serious resistance today to the trade. Made a run at it several times, 2 times I believe, unable to get above it. We saw a lot of selling pressure enter the market. You know, I continue to believe that this area, 1345, 1350, is a good place to look at selling some beans. I'm a little bit concerned about the staying power of this bean market. I'm concerned about the continuing flow of bullish information here over the next summer or the next several months. We have a big crop coming out of South America, and typically at this time of the year we see exports slow. That's really been supporting things thus far, but as I said, I'm a little bit concerned about this bean market. And anytime you're at the top side of the range is a good time to at least consider making some sales.
Yeah, we've met resistance a couple times around that 1350 area.
Yep.
You know, corn, we also saw a little bit of buying interest come in today.
Yep.
We caught a little bit of support yesterday if we take a look at the daily chart here around that 420 area. I think what propped us up early on in the session today was a large export sale going to Japan. That was for next year, but I think that did flow into this year's corn as well.
Yep.
We saw about 280,000 metric tons going to Japan. So that was a rather large sale in the overnight session. But like I said, we continue to get technical support right around that 420 area.
Yep.
I look for that to hold. You know, resistance right now is hanging over us around the 440 area. The 50-day moving average is right in that area as well. You know, looking out towards the remainder of the year, I think trade's going to be rather light. The volume's going to be really low. We'll probably see some choppy trade here. And, you know, looking at this range between 420 and 440, I would anticipate us staying within that range until basically the remainder of the year, as a lot of traders are going to be taking some time off for the Christmas holiday.
Yeah, you know, one thing coming down the pipe this week that people will be looking at closely is tomorrow's EIA ethanol report. Take a look here at this chart detailing the ethanol margins in Iowa right now in dollars per bushel. You can see that basically with a sideways corn market and an ethanol market, which has picked up some ground here in recent sessions or recent weeks, I guess, we now have a crush margin above $4 per bushel. That was where it was sitting last week, so we'd expect a very strong ethanol weekly production figure reported tomorrow from the EIA. With that being said, there is some concern that the weekly pace of ethanol production may not be sustainable just based on, as we talked about on last week's show, nameplate capacity that we have out there in the grain belt. So while we do expect another strong report tomorrow from the EIA, I don't know if it has a lot of staying power in its ability to rally this corn market. It seems like a lot of people are concerned about the legislation proposed by Dianne Feinstein and the proposals to change the ethanol mandate by the EPA. So in general here, I think that ethanol production is going to look good tomorrow, but I would expect it to kind of continue having a hard time rallying this corn market.
You know, let's not forget about wheat either. We didn't, like I said in the intro, we did miss out on the Egyptian tender once again. We continue to make new contract lows. The Chicago and Kansas City wheat contracts both hit new contract lows here today. So that's going to be something we're going to have to continue to watch as we move out here towards the end of the year.
Yep. If you have any questions, feel free to visit us at grainhedge.com or give a call here to the office. Our number is 877-472-4607. Keep in mind, we do have a great mobile app now available for iPhone, Android, iPad, and tablet. Visit us at grainhedge.com and take a no-obligation trial for yourself. Thanks a lot for joining us. We'll see you here tomorrow for the EIA report.